Hey everyone, I've got Scott back with me today. We're doing another video. We're talking about uranium companies. Again, my name's Andy. My channel is Finding Value. We appreciate Scott coming on. You can follow him on Twitter at @U_AG_.
Yes, that's right. I can just pull it up very quickly.
Yep, there's his Twitter. Oh, look, there's a message from Finding Value Finance. Oh, yeah.
There you go. I'll hide that. Yeah. So there it is.
Yep, there's his Twitter handle that I can barely. There we go.
Yeah.
So we're here to talk about uranium mining companies. We want to get educated, Scott. What should we look at, honestly? Like, I'm getting a lot of questions. You're getting a lot of questions. What's important? What's not important? What are your favorite companies? And I'll give you my opinion as well, interjected in here. So
yeah. I mean, first of all, this is not financial advice. You have to do your own due diligence. You can't just rely on someone on YouTube or Twitter. So I would just like to say that, because I do have a lot of interest in these stocks, and this is not financial advice. So yeah, basically when I go about selecting my mining stocks, I first look at jurisdiction. So I think there's going to be a huge rush into the uranium stocks during this bull cycle. And I don't want to take, I think all uranium stocks will effectively make good gains. And the last thing I want to do is lose out on all those gains because of the jurisdictional risk, which means basically your permitting fails or your licensing fails, and it really stops, it puts a halt on the share price movement. So basically the jurisdictions that I'm familiar with in uranium, just because of the number of companies that's produced in the region or the number of miners that are operating in those regions, are basically Namibia, which is Africa. You've got Athabasca, which is Canada, and you've got Wyoming in the USA. So for me, they are the main ones that I start off with. And I don't know if you want to talk about explorers or developers, or do you have any preference, Andy?
Yeah, well, I think we should talk a little bit about both, and maybe go through the Lassonde curve real quick.
Great. So basically, out of this bull run, I just want as much news flow as possible. So news flows often drive share prices. And if you look at the life cycle, explorer's life cycle, this is effectively it. And during my investment, I know time spent on investing, like this stuff really matters. And what it is really, you've got this concept period or pre-discovery period where they're raising capital, raising equity, raising capital through equity raises and placements and so on to get the funding for drilling. And so they don't have anything. This is like a shell company by then. They buy a piece of tenant, or they propose to buy a piece of tenant or tenements. And this is where they go about doing the basic stuff like due diligence. But then discovery really happens when they hit something. So basically, this is where I want to really get in. This is where the most attractive point for me in the explorer is really. So, you find an explorer basically that's just hit. And this typically lasts 1 to 2 years, according to this. But I mean, I've seen it last a lot longer than that. But what you want is something, a company, an explorer, that's just hit and will continue to hit, because that drives a lot of enthusiasm, especially if you have the bull market behind your back. So, if the money is flowing into the uranium companies generally, this is where people rush into, because there will be all the hype and enthusiasm around how big the discovery might be. So a classic example right now is the reason why I like, we mentioned baseload and 92 energy in my previous interview with you. The reason why I like them so much is because they've just made their first discovery. They've just hit their uranium holes. And that means potentially if they keep coming up with positive news flow, this thing can get overhyped. There might be an over enthusiasm, and the share price movement might reflect that level of hype and enthusiasm. So that's what I really like doing with the life cycle. And this is really true for a lot of the companies. So, you see heaps of companies out there right now, like not just in uranium space, but in gold space, graphite, graphenes, in sectors as well, where the companies come up with huge NPV calculations. So net present value calculations of what their production, capacity might do or future production might do. But when you don't have funding and when you're just waiting for funding to come in, and the fee with that is really this, like it's the dilution. So for once you've made the discovery, you need to spend a whole lot of money on building your infrastructure and building your production facilities, which means it's naturally going to lead to dilution, or it runs into a risk of not getting debt financing. It's very hard to get debt financing when you don't really have any production or cash flow. So, you know, the natural route that a lot of these companies go through is equity raises. And usually equity raises are done at a discount to the current market value of the share prices. So this is where you can sit in this period for a long time. And this is typically why I don't really like getting into companies where they are sitting at that, you know, feasibility study phase, where they don't have the money yet, where they don't have the capital to build their production and really start producing their commodities yet. So yeah, what I would look for is, if we're talking about developers, I want to get in around here. I want to get in where, okay, you're getting a glimpse of them getting financing, you're getting a glimpse of them raising equity, or they have already raised equity and they're good to start, you know, building out infrastructures and so on. And that's why you can see a good run if you can get into a developer with huge NPV relative to the market cap, so huge valuation of future cash flows relative to their market capitalization. And if you can get a glimpse of them getting financing and maybe start producing during this bull market, that's where the winner will be also. So that's how I kind of look at it.
Yeah. So one thing to clarify too, what Scott is doing is he's looking for explorers that have hit something, but they have undefined deposits. Yes. So they don't have a resource estimate. They hit something. They say, hey, look, we have something. There's something down there. We just don't know how big it is. So you're mitigating your risk by investing in a company that's hit something, but hasn't defined it yet. And the reason you're doing that is because there's a whole bunch of exploration companies that may not hit anything. Yeah. Now here's the question that I have. This is going to go a little bit crazy. All right. Does it matter if they hit anything in this next bull market?
Well, towards the end of the bull market, it won't matter. I don't think. Right now, like where we are in the market right now, I think it does matter a little bit. It really, once again, it's all about market capitalization, right? So if you've got something in Athabasca sitting at like 5 million market capitalization, the likelihood of it going to 50 million or 100 million without any uranium, I wouldn't discount that. Like that's a real possibility. But what I would be doing at this stage of the bull market and for the biggest returns is I want to look for the next company that can come out with the aero deposit, next gen's aero deposit. And the reason why I say that is this. So I've just done a last interview that I did with you. I said it's when they come out with a maiden resource that the share prices really get pushed up. And this isn't just for uranium. This is for any company. So if you look at this, and I'll put something crazy on for you, because now I will be comparing this to the uranium price. And the reason why I'm doing this is I want to show you that the uranium prices were in a huge bear market. So from here, when they made first discovery, that's when it started, it was falling. Like in 2007 peak was around here. Like it was falling and falling and falling. And look at how when the share prices went up, it was falling. Like, can you imagine what the gains in this company might have been if you had a tailwind of rising uranium prices? It would have been crazy, right? And like money would have just piled in.
Epic.
Yeah, it would have been epic. It would have been epic. But so basically, this is what I want to find the next gen. I want to find the next aero deposit. I want to find the company with potentially something as large as, or something, maybe not as large as, but something comparable to next gen, or even Heather's Rough Rider. So here's the thing. So you've got first all that arrow, and you've got all these drilling programs. So first pull that arrow, it hits. Okay, it spiked a little bit, which is exactly what baseload had done to date. And 92 years old, when they first hit, they had a pretty big spike. So you had 100% in that month. If you look at the gains at the top here, if I roll over this, you've had 100% gain. Like that's pretty much what baseload had done, and that's pretty much what 92 energy had done. And then you go through a period, a bit quiet, no news flow. People are wondering, okay, is this like a genuine hit? And then you go into the next tool, right? and then they find something decent and you get another spike. And then, so with this, the difference is I don't expect baseload and 92 energy and other explorers, if they hit uranium, I don't expect these like really quiet periods for a long time. I think next time, you know, they hit something decent, I think it could just continue going up because of the tailwind of the uranium market right now. But what you will see is they keep coming up with these wonderful news flows. Like they keep hitting like up to 57,000 CPS. I mean, baseload just hit 22,000 CPS, but up to 57,000 CPS. And they keep coming up with these beautiful news flows, but you don't really see, like this is pretty stagnant for a long period of time. So 2004, 2006, almost 2 years, until they announced their maiden resource estimate. And the share price just skyrockets. And this is the thing. When baseload or any other company with the tailwind of the uranium price or uranium market right now, the bullish uranium market right now, if they hit and if they come up with resource estimate, which Sykes is planning to do by the end of this year, like you could see unimaginable gains in my opinion. And that's why like these explorers that fit into this life cycle, you don't want, I don't think you want any explorer right now where they are towards the end of this curve, because then they will run into this, where they go, okay, well, now we need financing. Okay, we've defined our resources. We've moved our resources into reserves, which means that you're getting a clearer picture or better view of what your actual reserves are, what the uranium sitting under the ground are. And now they, you know, start undertaking feasibility studies. Then you run into this death belly. So, and another, yeah.
Is there any companies? I'm going to be greedy here. All right. Let's say I'm really greedy.
Yeah.
And then you've got over there, you got the orphan period. So I want a little orphan in my portfolio. Is there any that are developers, but then also simultaneously are exploring? Is there any, I mean, companies?
Not exactly developers, but I mean, this is getting close to a development stage. So Elevate would be one. And this is probably my largest holding right now on once again, not financial advice. This is just what I'm just telling you what I'm doing. Elevate is probably the largest holding right now on the Australian Stock Exchange for me. And the reason for that is the news flow that we're going to get. So let's just go to presentation. And this is where I just typically start off.
I think Deep Yellow is similar to them too, because I think they're also trying to expand their resources and they're trying to develop something. Yep.
Yeah, Deep Yellow. Bannerman could be sitting. Bannerman could be sitting, I don't know, somewhere around here. So maybe they don't have long to go. Like I know they just did some financing equity raises, which put the share prices down. And I think it might be a good opportunity. I think I might get some next week. I don't know. But yeah, like, I mean, yeah, this could be a good time. Like, I don't know if you want to pick the right at the bottom here. Like you might want to get in a little bit before so that you know that, you know, it could effectively have a pretty good lift off when they start getting financing and all their plans come into place. So, so this is Elevate Uranium. So if you look at their, and this is where I just typically start off, you know, it's got most amount of information just in the short, in a most concise way. So if you just go to Elevate Uranium and just understand the upside potential and the news flow that's going to come on. Okay, so basically they are a pretty well established explorer with 100 million pounds of uranium under the ground in resource estimates. But this is where I really start getting excited about Elevate, for example, and just telling you what the news flow might be and where we might be for some of these tenements that Elevate owns. We might be here in pre-discovery or like just getting started with this discovery. So they've got a lot of tenements. The Elevate has a lot of tenements. So you've got Namibian project, for example. You've got 61 million established already for Namibian project. I think something like 35 million for the Australian projects, but it's pretty good grade. And the thing of okay, so I'll go to the news flow first, because this is what you can expect in terms of news flow in the pipeline. So you've got Copies, for example, which is currently what they're drilling right now. And this is what they have in terms of the resource estimate. So resource estimate of around 40 something million was for, I believe, from memory. Sorry, I've been looking at so many reports now, I lose count, but yeah, so basically you've got 42, 43 million. That's for one land in America. And so that's a small part of their portfolio. But you look at copies. So okay, so now you know that it's not just one holding. So what I like to do with Explorer is I want to see multiple tenements, because that in itself is kind of like diversification, because I'm a big fan of diversifying. I don't like putting all the money in one basket, all the eggs in one basket. I just want to make sure that I diversify. But when you have explorers with multiple tenements, that's providing you with diversification that you're looking for. Because if, say, for example, they found nothing in copies, or you still have all these tenements, so if one of those tenements hits, you could still do well. So I'm looking for multiple tenements. So that's the one with the resource estimate. But look at the news flow. So you've got Copies project, which is kind of what they're drilling right now. They're going to come up with a resource estimate soon, updated estimate for Copies, right? That's a news flow. Like we've seen what it can do to share prices when they come up with a new resource estimate. Okay, but let's you got Hirabib, you've got other Namibia tenements, and you've got all these things going on. But this is where it gets really exciting for me for Elevate, right? Because I don't think, maybe some people commented on my Twitter saying, why didn't you mention Elevate if you like it so much? Well, I didn't have the chance to, but I'll talk about it now. So you've got Copies project right now. This is pretty big, 5.1 kilometers in length. So this is the paleo channel. You've got a pretty big channel here, and pretty much every single hole that they drill. So these are drill holes, and these are the grades, right? So you're looking at 1,000 to 5,000 ppm in grades, which is not low. That's a pretty good grade for Namibian asset, right? And then you've got, like, every time it looks like they're using a grid approach, which means they just, drilling it out in line, right? And yeah, they pretty much every single hole that they drilled, it's hit something. It's looking good.
Yeah, so they have a massive plot, and they're just defining what this thing looks like.
Yeah.
Yep.
Yeah.
With steady news flow.
So yeah, they define. Yeah, they're just punching the hole, and everything's hitting. So it looks good.
And these are very shallow holes. These are not like Athabasca deep holes.
Shallow. These are really, really shallow. It's ridiculous. So I tweeted saying that I could almost dig it out with my my shovel. I mean, I'm being a little bit silly there, but like these are how shallow they are. So if you look at Elevate, like you're looking at 1 meter depth.
That's nothing.
4 meters depth. And what this really means is that they can really accelerate this program, because you've got the cost is pretty much determined by how many meters you drill. And so if you only need to drill a hole that's like 20 meters deep, then if you have a 5,000 meters drilling program, you can drill a lot.
Yep.
You can put in a lot of holes and come up with that resource estimate really quickly. Sorry, where was I?
So that would also be easier to go into production with, because they're basically just skimming the tops of everything.
Yeah, that's right. So it can be an open pitable mine. And what open pit for you, those of you who don't know, like, if it's not an open pit mine, if it's a traditional mining method, you basically dig a hole in the ground and you go through the rail, and you see all those movies where you go to coal sites and things like that, and you come out dirty. That's what it looks like in normal holes. But if it's an open pit or a mine, you're effectively looking at something like this, where you just dig it out and you just put it on the truck and take it to the processing center. So it's a much more economical way of drilling something out. So anyway, so with the Copies project, yeah.
Do you think they could potentially go into production during this cycle? Or do you think they're too far away?
I think I don't know. I don't really want them to go into production, to be honest. So what I want them to do is just keep drilling and keep coming up with huge estimates. And I want it to be pretty much over and done with when we reach this stage. I don't want them to go down to this stage. But what I think will happen with Elevate, just because of the potential, like, I'll talk about the potential for Elevate, because okay, let me get to the potential of this, right? Because you've got 5.1 kilometer here, and they've hit. Let's see what they come up with in terms of resource estimates to guide us through the other tenements that they might have. But what's really attractive for me is this Uranium project, which is pretty much undrilled so far. So you saw this is a 5.1 kilometer in length, right? Well, look at this. You've got Urabib, which is 44 kilometers in length. And it's just, okay, they haven't hit all the way throughout, but this is a huge paleo channel. And they've hit it here, they've hit it here, they've hit it here, they've hit pretty well here, they've hit it here, and they've hit it here. So it indicates to me that there's some type of continuity throughout the system. Yep. And if they start drilling this, and it does say here, tenement is 15 times larger than copies. Like this is like what no one probably considers when they're buying Elevate. They probably look at the bottom line, go 100 million pounds in the ground. Okay, well, that's $2, per pound in terms of market cap to pounds in the ground. Yeah, fair enough. But when you consider the potential upside to this, where they haven't released the resource estimate for this, as well as copies. So copies is coming up in terms of resource estimates, and they can potentially drill more, I don't know, around this region and find even more than the resource estimate that they were coming with. But then if you look at the Hirabi project, like this is huge.
Yeah, it's massive.
This tenement is huge.
It's absolutely
this
massive.
Is crazy. 44 kilometers.
I mean, this could result in hundreds of millions of pounds, maybe even more than that.
We don't know. Like we don't even. I can't even imagine how big it could be. I mean, obviously they will need to start hitting some high grades at shallows for it to be economical, but I feel like a lot of them, like low ppm, so low grade uranium, and something that's a little bit deeper could become economical at good uranium prices. So so this is Hirabi. Like this is potential for it to be huge. So you've got all these potentials, like all these other tenements as well. But this is what I'm talking about. So with this, once again, they've got some type of resource estimate established. And this is where the timing can be off. So 1 to 2 years. That's if you drilled hard aggressively throughout the bull market, I think, is what you're talking about, like baseload. Like they've just started drilling, they're finding stuff, they're going really aggressive. But a lot of these mining companies like Elevate has been pretty quiet during the bear market. They don't want to spend all this money. They don't want to dilute the shares too much and spend all this money on exploring. So it's now when they can raise money at pretty good, cost of capital through equity raises, that they can start actually exploring quite aggressively and ignore the years here. But if you look at Elevate, it's kind of here, like in terms of the life cycle. They just getting started. They just started drilling. They're going to drill a lot more. If you look at the news flow again, they're going to drill a whole heap of tenements, not just one. Drilling, all over. Drilling, like all the way throughout the year for all these different properties. And just imagine the news flow coming out of it, just imagine the hype that it will create. So
they did it on purpose.
Elevate, I think I might need to get more of this. I'm feeling more bullish just talking about it with you, Andy.
I know. It's all the news flow is positive. That's a positive thing.
Yeah.
For an explorer.
Maybe I'll get more. I don't know. Like, I mean, I feel like I'm chasing to some extent when I'm buying at these prices, but I think the upside is huge with Elevate. You're trading at we've talked about the potential for, $20 per pound in the ground or even more than that. But with the beautiful thing about such a big tenement holding like this, and maybe if they come up with like, very tier 1 like discovery and, pounds in the ground, like say, 200 million, 300 million, who knows? Then you'll start attracting a whole different audience. Not just looking at going to be a producer yourself. You're talking about potentially like China coming in to buy to secure their supplies in uranium. You're talking about India coming in to offer them, bid together. You're talking about like other big miners within the Namibia region, like Paladin, for example, that could potentially, think about purchasing Elevate. Like you're introducing whole different dimension of possible outcomes when you're talking about big tenements like this. So that's what I like.
Or if they find enough and enough money flows in, they'll be buying other people.
Yeah, they could.
Yeah, because what the assets
and,
they have.
Yeah, and we talked about the crypto bros before, right? And I don't think you can ignore that. Like, I just don't think you can ignore that. So we've talked about how the smart money pulls out first, and this is so clear, right? Actually, it's clear in any market. I'll show you this. So we've talked about CCJ. Okay, let's just put the major ones here, main names here. Okay, let's hide this. You've got the CCJ. You've got DML, which is kind of like a medium-sized mid-cap back then. And then you've got, say, what was a small one? EME, let's say energy metals. Okay, so if you look at this, and if you look at how it flattens, CCJ is flattening here. Okay, look at how much room U.UN, the spot price, has left, right? It goes parabolic when CCJ is flattening. DML is going parabolic when CCJ has done nothing. And Mega Uranium is going absolutely parabolic when CCJ has done nothing. So as we discussed previously, you're talking about towards the end of the bull market for mid caps and smaller caps like Elevate. You're talking about retail investors not caring about the valuation metrics and just piling in. And you see this everywhere. You know what?
Yeah, so
amazing.
I agree with you. I think it's totally retail driven here because they all have the same rough chart. You can see that pause before and the ones below a little bit too. I actually know that pattern because SM Energy has that pattern too, and it repeats over and over. Like I've seen it all over the place. But I think the retail sector drove that last bit way higher on the smaller cap companies. For sure.
Smaller cap.
100% agree there.
And you know what's amazing? This happens like in any market you look at. Like if you look at Bitcoin and you compare this to Ethereum, it happens everywhere. It just gives you an early sign of when to get out, when to start scaling out. Oops. Okay, watch this, right? So Bitcoin, back here, if you see, it was done, right? This month, it was red day, but Ethereum still continued on because of the hype by retail. So it gave you a warning. When Bitcoin was falling as the bigger one of the cryptos, you know, it gave you a warning. Same with this. It fell hard. Ethereum didn't fall that hard if you look at the monthly chart. And then it only put in a very marginal high. Like this is pretty much equal, right, to the previous top here. But Ethereum ran. Like this is what you're going to see with the explorers, I think, is that you're going to have like all these mature ones like fade out in terms of their gains. And then you're going to have like retail pile in late into these small explorers driving the prices up. And that's where I think Elevate shines. Like I'm in it for piling as well. Like I completely agree. Later stages of the bull market, it will be all like retail driven, meme driven. And what I love about this is that we've got like, you know, guys on Twitter talking about Elevate quite a bit now. And this might sound so stupid and you might regret having me on your channel because it sounds so crazy, but we've got Koji, like the meme guy, the uranium meme guy, Koji. Like he's tweeting about Elevate. He's like putting some funny things on it and it's a dog. You know what happens to everything dog related, right? in the crypto market, you've got Dodge. Okay, this is how ridiculous Dodge was, right? Like you've got all this meme stuff that just absolutely blew up. Like Shiba Inu. That blew up. Right?
These are so they're so depressing to me. They're so depressing. Like that the money that went in there, it's just depressing to me.
I know. It's crazy. It's crazy.
Bitcoin, the Bitcoin and Ethereum chart doesn't look too hot. That's my opinion too. We got large selling pressure, and then it's just like rolling over with no buyers. That looks horrible right there too. So that is, if you inverted the chart upside down, it would look good. See, now that one looks really good.
Yeah,
That's
this is
strong like
looking
bull.
good. Like look at when you zoom it out. Like I'm just gonna go crazy. I was like, okay, how about if uranium, like we discussed before, not financial advice, like this is like the high case, right? So you've got to scale out, scale in, scale out. Just remember to do that. I don't plan to hold all my holdings until then, but I'm just putting out like the craziest case. So like this is
Yeah,
what
I was
I've
just
drawn
gonna
in.
say that. Wow, you just put in exactly what I was gonna say. I was like, just put a megaphone pattern in it and call it good.
I'm just like, okay, this is like perfect megaphone pattern, like down here, like it's like bang, 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 all the way down, and then it's coming up.
Yep.
Like, I don't know. Like this is, I don't know. Is it possible?
What's it
Maybe
at right now? It's at 60 something cents, I
69
think.
cents. Yeah.
And you've got an upper band of like 50 something dollars.
52. Yeah. Yeah.
Jeez.
Like this is okay, guys. Like, I mean, anyone listening to this, please like don't take this as financial advice or anything like that, because this is just like me doing crazy stuff on the charts. But I mean, who knows, right? Because we've talked about potential for 1,650 uranium price and potential for, okay, take that as 10%. Let's just say uranium per pound gets valued for explorers, $100 per pound in the ground. And then they upgrade their resource estimate by the end of the bull market to say 300 million. I don't know. That's really high case, but it's not impossible, I don't think. So if you go 100 million times 300, what does it even give you? Is that 30 billion in market cap?
Yeah, the two zeros. Yep.
Yeah, 30 billion in market cap. It is a remote, I repeat the word remote possibility. Like that's how crazy these things get. And then if you've got the tailwinds of all the meme guys out there like Koji,
Yep.
you know, and the crypto bros come in looking at Dodge and Shiba and go, oh wow, this is a dog in the uranium space. Let's go for it.
Well, hold on. So I'm gonna go back to that. Okay, I'm gonna go back to what you just said there. And I said,
yeah,
what if it doesn't even matter what they have in the ground? All that matters is exactly what you just said.
Yeah, that's what's going to matter in the last leg of the bull run, I think.
Like let's say some people, and here's a hypothetical, right? We do all this analysis. We think about these things at night. We go to bed. We're like, this is it. This is why. It's because of the fundamentals. And then all of a sudden, they whoever it is, they pile into Fission 3.0. And they're like, I like it because it's the last generation. It's a 3.0 instead of the original.
Yeah, 3.0.
And then they put it on Reddit, and then they all like run at it. Like all the crypto.
That's exactly what's going to happen, I think.
So
with Elevate, right? So you've got the Koji guy, and also another thing going for it for the last leg of this bull run is the word uranium in the company's name. It's the only Australian listed company, as far as I know, that's got uranium in its name. So. It attracts the general public, and Elevate sounds pretty cool. Like you're elevating, right? All the share prices must go up because it's got Elevate in it.
Here's another one that we could look at too is which company is the most heavily shorted, and it's almost like people will run at that thing too.
That's a good idea.
Yeah, and here's another thing I'll say about that pattern that you have. It's better to have the pattern and have it be large like that than to not have it at all. So I mean, that's where I'm at with all these patterns.
That's right. So you know, like people that don't know about market capitalization, how to value a company and all that type of stuff, like when they look at this chart, they'll go, oh, you hit 1994, you hit $33, you hit 40 something bucks in 2008. Oh, you must go higher than that. Let's pile in. So like that's where I think dilution don't matter too much towards the end of the euphoric bull run, because like you're talking about general public. Like we're early in this. Like anyone looking at this video right now, like we are like super early. This is just getting started, in my opinion. So you know, when we talk about crowds that are going to pile in at these prices, like we're talking about general retail that don't know about uranium, that don't know about market capitalization or valuation metrics. You're talking about general public looking at some tip takers, basically. Tip takers that are going to take tips on Twitter and just pile on.
Oh, for sure. And if it goes up fast, you're going to get everyone and their grandma to be buying Elevate and Deep Yellow and all these other ones. They'll all be just piling into everything. Now there is a possibility of hitting that upper rail, having it be a megaphone type pattern and then breaking through it and continue to run. There is that possibility. I'm not saying
there is the
that it's
possibility
going to, but there is the possibility.
Like,
and if you want to see a company, try a LAC. LAC is a lithium company. And I'm just using this as an example. I think LAC is one that did a barrel. Is that the cylinder pattern or a megaphone? Can't tell.
Oh, I mean, they're similar, right?
They're very similar. But that one's broken out of the megaphone cylinder, however you want to say it, pattern, and it's running.
Yeah.
And I'm starting to see that in everything in the lithium type moves. Now, I wouldn't buy that up there. If you can buy Elevate, that's at the bottom of that megaphone.
Yeah.
But I mean, some of these, they just, it's ridiculous. Yep.
Yeah. So that's why, I mean, my personal strategy, and I want to get pretty silly with Elevate because of the meme worthiness in this, and because I know like fundamentals at the end of the euphorical. I think one of the reasons why Yahoo went so big during the tech bubble is the name. Like, I don't know about over there in the USA, but all the guys that I was hanging out with at the time were like,
we were talking about Yahoo. Yep.
Yeah. So basically, at the peak of Yahoo's market cap, I think, I don't know, it was obviously a multi-billion-dollar company in terms of market cap, and it was only making like $200 million in revenue or something, like from memory, and it was trading like total market capitalization of Yahoo at its peak, I think, was like bigger than all New Zealand stocks combined or something like that. So you know, like when it's meme worthy, like Yahoo, when everyone's going Yahoo, you know, and so, piling in, like valuations just become irrelevant.
So I think okay, so if we were to go off the meme, which companies do you think have the highest probability based just off the name of the company? I'll give you one here. I think a lot of people like Bannerman.
I think the charismatic CEO at Bannerman, Brendan, obviously Brendan Munro, like, because he's got pretty big presence on Twitter and just on social media generally. So I think that's got meme potential. Like, I mean, because of his presence, when they first come on Twitter, like he'll see the CEO like of Bannerman like tweeting stuff out, like people will naturally be attracted to that.
And you could say that you got a 10 bagger, so you could say 10 baggerman. See? 10 baggerman. Then you could do there was another name that I can't remember what we were calling it. There was another name that I forgot. I call it Little Banny every once in a while.
Yeah, so I think that's exactly the meme worthiness, I think, is what drove like Mega Uranium, for example, like did a huge run, right? So we talked about that before in terms of how big Mega Uranium run was.
I own Mega Uranium because of that, if you want to know. They own a little bit in Next Gen Energy. They have like a small project and stuff.
Yeah,
in consolidated uranium, I think.
But they did nothing. They did nothing for a while. And then when it's time for the retail to pile in, it's just all crazy, you know. That's what I mean about retail participation. I think it might sound crazy, as crazy as this might sound. Like, I think there's a genuine reason why we should consider those meme worthiness. Like when we're talking about the last phase of the bull run, like we need to look at those things. So Mega Uranium, I don't have any now, but I plan to get some the next after I sell out of some of the bigger miners next leg up, because of the name Mega Uranium.
Well, fission uranium too is a good one. You could say, because it's fission and it's got uranium in the name.
Yeah.
And I think Encore Energy has a pretty hard following.
Yeah.
A lot of people talk about that one.
But yeah, look at this. That's pretty beautiful. Like you've got, this is a beautiful chart, right? So this is like exactly like your Ethereum chart. And so you've got like all the resistance here, support here, broke through, came down, tested again. Once it breaks, it's gonna go up here.
Yeah.
Like and when I will get it, I'll tell you when I will get it. So I'll sell out of after next leg up. I do plan to sell out of my bigger holding because, as I said, I think the bigger caps will run out of steam to some extent. And hold on, where's my path?
See, I'm very much different than you with that respect. What I do is I just pick these up across the board. I kind of just have a portfolio of them. I just sit in them and then I just wait for the people to come. I don't want to try to time anything. I just want to buy it, hold on. And that move is so big. That move is so large that if you just have some money in it, you're going to kill it. It's not even about like trying to time anything.
Okay, this is where I try and get play a little bit of a cute game, right? Because I think you looks like really beautiful in terms of chart, right? And it's a bigger cap. It's got the US story going for it. And I think if I can take some profit like around here and wait for a pullback, like if I see all the bigger miners like running into resistance at the same time that the UUU is running into resistance, I'll probably sell some, take profit from the UUU and put it in MGA. And what I'll look for.
You didn't want to wait for the cup and handle pattern to develop?
No, I think I'm good to go to the smaller explorers. I mean, I might not get out of all of my positions, but you know, what I'll be looking for here is like this is just an if scenario, so I'll have to observe what this mega uranium does. But if it can break out here, come up to here, and then come down again to test this support, like, you know, I'll go like all in.
Yeah, well, I mean, it's got support right now. Like if you were to dive in there, it's actually on top of that support line right now. If I can remember correctly, at least it's on the top of the one.
So what you're looking at is here.
Yeah, that one. That's the one that I'm looking at. Yep. And then you've got the upper one. Yep, that's the next one. Yep.
This is the next one. So once we break out of here and we can test this, and then obviously with the smaller caps, where if there is a correction, like say for example CCJ. Okay, so let's go back to CCJ charts. And we've talked about how we think we're here, how I think we're here. I think we're just bumping our head against this, like that previous high, which is what's happening now, bumping and just going sideways for a little bit, few days. Once we break out, I think we go parabolic. But this CCJ is probably only corrected 25% here. But a lot of the smaller miners corrected during this period, like 50, 60%. So I'm expecting the same for a lot of the smaller miners. I'm not going to try and trade that in my core positions, like your ELA, your base load, 92 year, whatever. But if I can see a pullback, and the thing is with me, I don't chase. So if I miss out on the run, if I missed out on catching this at a reasonable price, so let's say right now in my head, I'm thinking, okay, let's try and catch this around this area. If it can run up and come down to this level, which will be around 60% decline, which is kind of normal in a correction phase for a lot of these explorers. If I can catch it here, I'd be laughing. Like that's what I would probably try to do.
Yeah, see the thing, I know you're using the buy and sell points at those areas, but there's only really one buy or sell point there, which I don't know how, I mean, there is some volume there looking at it. Yeah, but it may not pause. It may just run, depending on how the uranium market does. I think when this thing goes, it's not going to stop. I think it's just going to go. I don't think we're going to get the pullback. That big of a pullback.
And that's the risk that I'm gonna have to take. So you know, with the bigger miners, I'm definitely willing to take my profits a little bit early because I know they won't have a lot of steam left towards the end. And yeah, you know that this commodity super cycle isn't just going to give you an opportunity within uranium, for example. So I'm looking at a whole bunch of things right now, like looking at sugar, for example. You know, sugar looks really good. You know, like it's formed double bottom here. It's, to me, like if it, okay, so this is all like an if scenario. So I'm watching a bunch of things to see, okay, if I can sell UU at that peak, around that peak, as I said, or DNN or whatever it might be, or PDN or URNN, if I can get out of those big names a little bit early and then maybe look for a rotation into another thing, mega uranium, like something like mega uranium would be perfect, but if it gave me the price. But if it doesn't, if it just runs away, then I'll be looking at other sectors like sugar, for example. Like when you've got a double bottom, it might come up here, it might go back down to retest, and I don't know, timing might line up. I'll just have to see what the best opportunities are at the time that I sell some of these bigger holdings. So that's how I'm going to play this.
I'm going to probably pile into physical metals. That's me.
I could do that too.
Like I'll let it crash all down, and then I'm going to just say, okay, I don't know. I haven't decided yet. What's going to happen after that liquidity event.
Yeah.
It really depends on where we are in the bull market. And if I'm even going to sell all of it, I might keep a little bit of it just to let it hang, keep some profits back or something.
Yeah. Yeah.
I don't know yet.
So I think there are so many opportunities during this commodity super cycle. And then obviously, like, you brought, my attention to something that's really attractive as well. So, like, I mean, we just keep talking, I think, Andy. We just keep talking. We just keep discussing the opportunities that might be out there, that might look cheap and that might have a lot of like upside potential within a short time frame. And yeah, we just play it by the ear as we go. Like, there's no need to predict anything right now. Like, we just play it as we go. Yeah.
I totally agree. And then I'm branching out into other stuff too. It's not, I don't hold just energy. I mean, I own some lithium. I own some other, we'll call it metals companies. And then I also own some shipping companies, if you know what I mean.
Yes, I do. So look at that. It's right at the top of my list right now.
Yep.
Like, no financial advice. Like,
we can talk about that one, another time. So we can go into shipping, the whole shipping thing, and that'll be a fun discussion as well. Because a lot of people on the channel I don't think they've researched shipping that much. So we've got I think we have a unique a unique viewpoint. Maybe not super unique if you're an insider, but yeah, we can end it there. I think, I don't think there's much else. I mean, that's a lot of stuff. And I mean, maybe the memes take over and they win. I don't know. Maybe they're going to be the largest returning stocks, and the fundamentals don't matter. I don't know.
Yeah,
it's a tough one.
Yeah.
So, one thing I do want to say is thank you for doing this video. I really appreciate it.
No, that's all good.
Thanks for coming on.
Do you mind if I just quickly share?
Yeah, go for it.
A verse from the Bible.
Yeah, go for it.
Do you mind?
No,
all right. Thank you, Andy. So yeah, I think this is pretty like telling of God's love towards us, and it's Romans 8 verses 38 to 39, and basically says, "For I am persuaded that neither death nor life, nor angels, nor principalities, nor powers, nor things present, nor things to come, nor height, nor depth, nor any other creature shall be able to separate us from the love of God, which is in Christ Jesus our Lord." So it's basically saying God loves us so much that there is absolutely nothing out there that can separate us from God's love. So I just wanted to share that.
Awesome. Thank you for sharing that, Scott.
Thank you, Andy. No, really, really fun having a chat with you all the time. Really grateful. Thank you.
Yeah, no problem. All right, so we'll catch you guys next time. Look for other videos that we release, and we'll see you later.
All right. Thank you, Andy. See you, everyone.